I want to welcome, first of all, our friends from Romania. They also joined our meeting from technical school in Romania. We cooperated within the DECIDE project. So we have today also professor and our colleagues from Romania from the project.
Great, thank you so much for joining us. Thank you.
Yeah.
And Professor Anatoly Kurgashev was supposed to join us as well. I do not know. So I think that we have 1 minute to start officially our seminar. So we will keep the time. Okay. So I think that we should start. Yes, am I right? Agnieszka, everything is ready?
Yes.
Okay, thank you very much. Ladies and gentlemen, I have a pleasure to welcome you at our second seminar, which is organized under the Center of Excellence at Warsaw School of Economics, the second edition. My name is Ewa Latoszek. I am professor from Warsaw School of Economics, and I'm the director of this Center of Excellence. And the title of this seminar is The Resilient European Economy, Addressing Financial and Sustainability Challenges. And my very warm welcoming and thanks I would like to address to our guests, of course, the organizers as well. Thank you very much to PhD Agnieszka Kłos from our university and PhD Aleksandra Borowicz, and to others who joined the organization of this seminar. But my very, very great welcoming I would like to address to our speakers, Professor Daniela Pellicini, and also to Patrick Dybek, because without your presence, we actually would not be able to organize this seminar. Thank you very much for agreeing to participate in the seminar, for preparing your papers, and for being ready to present in them. I appreciate very much your involvement, as the topics are very timely and they're very insight deep into such issues is connected with the current challenges of the European Union. And I'm sure that today's session will be very inspiring and will also be connected with the discussion and with the questions. I hope so, and I will be really very grateful to our audience to participate actively in the seminar. And before I present our speakers and moderators, allow me to say a few words about the Center of Excellence. Actually, the Center of Excellence, which is the organizer of this seminar, was established at the beginning in 2016 under the special program of Jean Monnet. This is the program which was actually first established by Jean Monnet, who, as you probably know, was one of the main fathers of the European integration. Jean Monnet was not only the politician, he actually realized that the idea of integration should not be just among the politicians about
Professor, you muted yourself. Please turn on the voice. So now we hear you. Yeah, now it's okay.
And shall I start again?
No, we are just about that. Jean Monnet was one of the most known fathers of the European integration.
Okay. And as I indicated, sorry about that, he actually was not just the politician and not just the leader, but he also was somebody who knew very well that the society should be involved very much into these processes, challenges, because without that it would just not play and not work out. So therefore he decided that he actually persuaded the others that the best way is to establish the special program, Jean Monnet program, which will be addressed to the academics, to integrate academics from all over the European Union, and to integrate them, to establish cooperation among them, and not only among those people from European Union, but also from outside the European Union. So therefore he just wanted to activate the academic society and to teach the students these issues. And this Center of Excellence, which we actually started, the second edition, which we actually started in 2024, is the continuation of the first CEWSE, of the first Center of Excellence, this of 2016. And the aims are very similar, because we would like to actually research and to teach the current challenges of the European Union in different areas. And please remember that European Union is not just only the single market and not just only the common currency, but it is always about something about the values, and this is very important in this European integration. And in creating this Center of Excellence, we cooperate with many universities from Poland. University of Gdańsk, Alexandra is the representative of this university, thank you very much. University of Warsaw, and also University of Economics in Katowice. I think that Professor Małgorzata Dzimbała from this university is also with us. And we also cooperate with many partners from abroad. Thank you to Italy, thank you to Romania, and thank you to Ukraine, and many, many others. And I also would like to present now the profiles of our speakers and moderators to you. So Professor Daniela Felicini, thank you very much that you join us, is the professor in History and Social Sciences, is also the Jean Monnet Chair holder, the president of PhD school at the University of Rome, Tor Vergata, I hope that I pronounce it properly. And M.A. Patrick Dybek is graduated from Warsaw School of Economics, is our PhD students from the PhD School of Warsaw School of Economics. He's also the certified CIMA member and consultant at Numer Global Consulting Poland. Thank you very much also for joining us. PhD Aleksandra Borowicz is the professor's assistant in the Department of International Economics and Economic Development in the Faculty of Economics from University of Gdańsk. He's also the member of Team Europe Poland and the president of Polish European Community Studies Association, which is the member of European Community Studies Association, the association which was established actually by the European Commission as one of the elements of this Jean Monnet program. And PhD Agnieszka Kłos, thank you very much also to both of you for joining us and for organizing this seminar, is the professor's assistant in the Jean Monnet Chair of European Union from Collegium of Socioeconomics, Warsaw School of Economics, and the holder of Jean Monnet module CEWSE, as well as the member of Polish European Community Studies Association. And she actually for a long time was the treasurer of this organization. Well, dear all, so thank you very much once again for your participation, for being here with us, for also having the possibility to listen to our speakers. And now I will give the floor to Agnieszka, PhD Agnieszka Kłos. Agnieszka, the floor is yours. And thank you very much for your attention. Thank you.
Thank you, Professor. Dear professors, dear colleagues, and dear participants, it's my great pleasure to welcome you to today's second seminar titled Resilient European Economy, Addressing Financial and Sustainability Challenges. The scale and speed of economic and political change, which pose a range of threats of the socio-economic order of the world, of states and of regions, make the issue of economic security more important and give it a new expression. At a time of profound geopolitical shifts, technological disruptions, climate change, and the aftermath of a global pandemic, the resilience of the European economy has become a matter of urgency. Building resilience is no longer just about recovering from crises, but it is about anticipating risks, adapting to rapid change, and ensuring that our economies remain robust, inclusive, and sustainable in the face of uncertainty. This seminar brings together leading experts to reflect on two particularly timely and critical dimensions of this transformation. First, we will explore the next generation EU in financing European industrial policy. This session will examine how the EU's recovery instrument not only addresses the economic fallout of the COVID-19 crisis, but also seeks to accelerate the twin green and digital transitions with long-term implications for Europe's industrial competitiveness. Second, we will turn to AI in banking, where we will discuss the growing role of artificial intelligence in reshaping financial services, improving operational efficiency. We are honored to welcome an outstanding panel of speakers, and I encourage all of you to actively engage in today's discussion. And I'm confident that the insights shared today will make a meaningful contribution to the ongoing debate on how Europe can strengthen its economic foundations for the challenges and opportunities that lie ahead. Thank you for joining us, and I wish you a productive and inspiring seminar. Before I give the floor to Dr. Aleksandra Borowicz, I would like to inform you that today's meeting is being recorded for the purpose of the project. Thank you. Ola?
Thank you, Agnieszka. I would like to welcome you again. However, there were so many warm words already said, so I'm not going to lose much more time. From technical point of view, I will just make a remark that on the chat in the next few minutes, I will paste the link to the evaluation form, which I encourage you to fill in, because it is important for us to have the feedback from you, how you explored and how you use the knowledge from our seminar. So I hope that you will find a few minutes after our seminar to fill in the form. So that's the technical point. And now I would like to focus on the scientific aspect of our today meeting. And I will invite Professor Felicini to take the floor. I'm not, because I hope that maybe you have some slides prepared to share, of course. So I will stop sharing the slide from the project, so you will have the possibility to share. I would like to mention that we will have today the opportunity to listen to two speakers with different perspective, because Professor Felicini is a great expert in economic history, focusing on different aspects connected with the economic environment. And Patrick is focusing on the latest things happening, so AI, and I hope that we will find also a common dimension for those two presentations. And I encourage you to think about the questions during our meetings, because after Patrick's presentation, we will have time for the discussion. If you don't feel enough secure, you can write on the chat, so I will follow the things happening on the chat, and on behalf of our participant, I will ask our experts and present the questions that we have on the chat. So Professor Felicini, I will just turn off my microphone and will leave you the floor. So the floor is yours. You have to unmute yourself.
Could you hear me?
Oh.
Could you hear me?
Yes.
And could you see the slides? Okay, perfect. So first of all, many thanks to my friends and colleagues, Professor Eva and Alexandra Borovic, hoping to pronounce correctly their name. We have, let's say, a good tradition of cooperation and scientific and human dialogue within EXA. We made successful projects together as DECIDE. So let's say, I've been very glad to let's say, to accept their invitation to give a paper in this interesting seminar. In this period, sorry, there is some problems.
We saw your presentation at the beginning. Something, yes. I think maybe again.
Okay.
Oh, now we see the slide.
In this period, it's quite a long time, but I'm studying European industrial policy, a very controversial issue. So I propose today a paper about the next generation EU in the funding of European industrial policy, with a main research question: if the next generation EU could be considered a turning point or not. Let's start. So, as let's say, we are almost all belonging to School of Economics and Social Sciences, so we know that after decades of bad reputation and criticism, industrial policy is back on the global agenda, not only in Europe. In the European Union, dissatisfaction with low growth and structural imbalances reinforces the belief that a common European industrial policy with common European funding can revive Europe's economic dynamism, resilience, and sustainability, as President von der Leyen said in her speech in Bruges in 2022. In recent years, the partial collapse of global supply chains as a result of the pandemic and the fallout from the war in Ukraine have reinforced calls for a common European industrial policy. In the face of economic competition from the US, China, India, with their specific and in some cases aggressive growth strategies, the need for industrial policy is even more evident. So both scholars and policymakers are once again talking about industrial policy at the European level, aiming to extend the provision of public goods from environmental and health protection to defense, and enhance innovation and convergence between the different areas of the Union, while protecting and promoting the European model. We have the resurgence of interest in industrial policy cannot conceal that it has a very controversial history, strictly intertwined with the history of European economic integration in itself. Industrial policy reflects the tensions between supranational and national dimensions, the sometimes even conflicting priorities of the member states and of the different sectors, the change over time of economic vision, and last but not least, the problems of its funding. I mentioned an article that I published with my co-author, Professor Paolo Paesani, in 2024 on a US journal, that didn't accept very frequently articles about European Union. So we were very proud when they accepted our article. But as an economic historian, I've been wondering whether and to what extent the current approach to financing European industrial policy differs from the past, both in terms of the level of resources, the amount of resources, and in the financing mechanisms that are almost as important as the quantity of the money offered. So my, let's say, research questions are: what does the next generation EU represent in the context of the evolution of European industrial policy? Is it a turning point heralding the definitive inclusion of industrial policy in the EU policy toolbox after so many failed attempts in the past to do so? Or is it just a one-off event justified by the need to deal with an exceptional episode as the pandemic? With this question in mind, I reconsidered very shortly, let's say, the European industrial policy and its funding in the history of the European Union. In the 70s and in the 80s, EEC launched a wide range of initiatives in industrial policy to promote the development of, let's say, cutting-edge technologies. First of all, in order to reduce the gap with the United States, and in the 70s to cope with the economic crisis that affected the members and put a stop to the golden age. I've just listed some of the, let's say, more important initiatives: the Colonna Memorandum, the project European champions in the computer industry, the Airbus Consortium, let's say a special action called Mariage Bureau, nicknamed Mariage Bureau, that tried to boost transnational cooperation among European business, the Plan d'Avignon, just to mention some of the initiatives. Very different measures, both in terms of approaches and results. But what emerged from all of these initiatives was the problem of resources. First and foremost, to overcome, in order to overcome the reluctance of European companies, especially European big business, in implementing cross-border investments in technologically advanced fields. Initially, the Commission promoted, let's say, used the European Investment Bank in order to push the amalgamation, as they named this operation. But let's say, in front of the, let's say, insufficiency of these of the action of the European Investment Bank, in 1978 the Commission launched the new Community Instrument, also known as the Ortoli Facility. The name is the nickname derived from the name of the French commissioner of the period. The NCI enabled the Commission to borrow up to 1 billion European unit of account on the capital market and lend to companies to finance investment projects consistent with EEC priorities. So European resources mobilized by the European Commission to be allocated to national companies, but for European projects. Endowed with tobacco duties, NCI, very rich, represented one of the most relevant and innovative financial instruments for European industrial policy, to the point that in recent debates on the issuing of Eurobonds of common debt, both economists and policymakers proposed a re-edition of the NCI as a viable solution that not require the amending of the treaties, which is more difficult and let's say with a different schedule, of course. In the 21st century, so between the, let's say, the beginning of the 21st century and the outbreak of the pandemic, the funding of industrial policy at the European level was based, roughly said, on three principles. Much with little, the Juncker multiplier, we will see, member state first, and prudent approach to innovation. So a focus mainly on regional policy, small, medium enterprises, and cohesion. Read in the light of these three principles, the Next Generation EU represents indeed a significant innovation, since Next Generation EU is much with much, 1.8 trillion euros. European Union first, with innovative financial instruments, a bolder approach to innovation. Let's explore in particularly the Juncker plan of 2014 that arrived after the, let's say, failure both of Lisbon Agenda and Europe 2020, two programs as very, let's say, really bombastic in their let's say, goals, but very badly structured. So bad performance. After considering the lowering of investment left by the crisis, the Commission launched the investment plan for Europe to promote sustainable, inclusive and green growth and steer the economies toward smart specialization. Taking up the legacy of the new community instrument, the one of the 1978, the plan was based on three main elements. The creation of a European Fund for Strategic Investment, the assistance to companies in investing in European projects, and the improvement of the framework conditions for investments. The endowment was not so high, just 21 billion, since the plan expected a multiplier effect of 1 to 15. So let's say very high, very optimistic idea of a leverage. The plan visibly aimed to push private investments and put liquidity into circulation. The European Fund for Strategic Investment experience has been the target of numerous criticism. Exactly, the over-reliance on leverage, first one, the quality of the investment projects, and the mechanism of additionality between national resources, companies' resources, and European resources. But notwithstanding, let's say, also the negative aspects of the Juncker plan, it left an important legacy for Next Generation EU and the success of Next Generation EU. The first one has been the comprehensive approach and other positive aspects. Smaller investment gap, administrative simplification, coordination in public investment initiatives, and long-term objectives, European public goods, sustainability and environmental goals. Which are now the concerns? The first one, the lack of continuity in the European investment programs, the lack of sufficient own resources, considering the diverse and also limited capacity of the each member states and the need to strengthen common debt. The Draghi report highlights that barriers to progress, to industrial progress, include exactly the inefficient use of common resources. But we know that the problem of European resources, both of own resources of the European Union and the Commission, both the resources that European Union is able to mobilize in the financial capital market is, let's say, is a persistent problem, notwithstanding the high recent capability of European Union to mobilize resources in the international capital market. When the European Union, during the pandemic, issued the bond for the so-called sure actions of the action against unemployment, it was not such an amount, but it was an important project. The Financial Times titled that European Union has entered in a very bold way in the financial capital market, in the financial market. So some conclusive remarks. My initial question was the Next Generation EU a turning point? Three possible answers. Yes, from a financial point of view. Maybe from an economic point of view. No, or not yet, from a political point of view. From a financial point of view, as I have already, let's say, illustrated 2 slides ago, the Next Generation EU paved the way for the future issuance of a European secure financial asset, and the demand of this type of security is large and will probably increase in the future. So from a financial point of view, both in the let's say external capability to mobilize capitals and in the mechanisms to redistribute these capitals for investment, Next Generation EU represented a real turning point. But from an economic point of view, the investments funded by the Next Generation EU are still in the process of being implemented. So it's too early to assess the impact of the Next Generation EU on growth and productivity overall. If these effects will be strongly positive, the chances of institutionalizing the Next Generation EU, of course, will increase. Success story, let's say, self-feed in some way. Last point, the political aspects. The current political situation in many European countries does not bode well for the possible institutionalization of the Next Generation EU mechanism, as it lacks the unity of purpose and vision that made the launch of the original Next Generation EU possible. This was Next Generation EU was launched in a period of solidarity, cohesion after the pandemic. So in let's say in a different season of the, let's say, of the European political life. On the other hand, and let's say I'm optimist, I try to be optimistic, as we said with Eva at the beginning, political conditions could change. Eva recalled a very important term, very important concept, values. So if we will be able to, let's say, to confirm the value of the European Union, and the political conditions could change. It's important that to have already ready in the cupboard an action plan as Next Generation EU that can be activated quickly. So thank you. Thank you very much. I have also some references in the last slide, but I can send my slide to, or I can put on the chat, so everybody could have a look to the references.
Okay. Thank you, Professor, for the slides in chat, but I will also privately ask you to send us the presentation from today's seminar. Thank you for your valuable speech and your comments about the industrial policy. I have noted some of the questions also from my side, but I think that we will leave the questions at the end of the seminar, as I mentioned at the beginning. So we will go to Patrick's presentation then. And our participants will also have the possibility to rethink the questions that will be formulated to you after second presentation. So Patrick, if you may, you can change the slides and share with us and start your presentation on AI in banking sector. So the hot topics, not the things that we work on a regular basis from my point of view, but I already saw some participants who are experts in terms of banking and usage of AI from my faculty. So my best welcome to my colleague Magdalena Markiewicz, because I've noticed her today. So I'm very happy that I have also my colleagues from Gdańsk here. So Patrick, I will leave you the floor.
Yes, thank you. First question, if you can see my screen and see my slides. If yes, that's perfect. Yeah, thank you very much for invitation. Actually, it's also a pleasure for me to talk more about the topic, which I'm quite involved in for many months, many even years, I would say. And actually, probably it's very hard to say if anyone is possible to ignore AI today, because it's actually touching every industry, every sector. So there was some very interesting sentence. One said that you will not be replaced by AI. Probably you will be replaced by worker using AI. And that's actually something which coming to my mind every time when I'm thinking about how actually our future related to work, related to what we are working on at university, or in business, commercially. And maybe first a few words, introduction words about my previous experience. So I'm mostly focused on strategy consulting. I worked for a couple of companies before. Last year, I started also a PhD program at Warsaw School of Economics, PhD program. I'm now PhD candidate, and I'm also kind of focusing on AI in banking sector. I'm trying to actually assess how actually it impacts, what is the relation between AI and sustainable competitiveness. So maybe about this moment in one moment, but before I start talking about the topic, let's first maybe think what is exactly this presentation will be about. Actually, I would like to touch two topics. First of all is how exactly banking sector, how exactly the companies can benefit thanks to using AI on daily basis. But on the other hand, it's going hand by hand with a lot of threats associated to cyber risk, a lot of threats which are actually generated by hackers. So there is also a lot of misinformation. And there is also one very important question to ask: how far we can actually trust what AI is giving us? If the answer is correct or not, how exactly to validate those kind of things? It's not so easy to actually find the answer for that, because almost every day we are hearing about the new programs, about new LLM tools, about new AI actually options, solutions, which are actually available for every user, not only banking user, but whatever you are doing in your work. Probably you heard about Copilot, which can help you with a lot of different applications like Word, PowerPoint, Excel, and etc. And there are also different solutions from different providers like Amazon, Grok from Tesla owner Elon Musk, for example. So there's a lot of different solutions. Of course, it varies how to use them. Of course, we should somehow be able to assess how we actually can use it in a smart way, wisely, because as I mentioned at the beginning with this question, probably without answer, how to use it how to use it to gain the answers which are correct. It's not so easy, but there is something we should still have in our minds, whatever we work on. So let's maybe start with the short, actually, history. History of economy was actually strictly elaborated one moment ago in the previous presentation. This is just a small add-on to the topic, how exactly this whole journey for AI started. And actually, at the beginning of 21st century, we see a couple of solutions for automation, for process streamlining, business intelligence, and it's not only associated to banking sector. It's associated to actually every industry, which used more advanced solutions, more advanced technology. So this journey started with quite simple programs like even Power BI or Tableau or some kind of a business intelligence programs which are the level above normal Excel sheets, which we know very well. And actually, how banking started using this technology is also somehow being able to provide a better solution for the clients, to offer them better products which are much more mobile, which doesn't require your visit in a banking branch. But on the other hand, banking are keeping a lot of interest in making their internal processes more efficient, more optimized. And it's also very important for them to keep that path on the same level for many years in the past and in the future. Of course, there's a big interest in it. So this is why fraud detection and risk management was very important for them at the beginning of 21st century, and this importance is even growing in the last years, and in the coming years we can actually expect the same kind of a trajectory. But what you can see at the 2010, the blockchain appeared. This technology has been more famous now because of the many cryptocurrency which actually have fundaments in the blockchain technology, but it was also used in very different way in the banking sector. And today we see some different solutions like real-time payment processing, AML processes, AML systems. And there is also one big trend that we can observe is decentralization of finance. Recently we heard about new fintech. Not always it's actually required to use standard universal bank. Sometimes it's only enough to just have the application. So that's also a lot of different solutions which we didn't know 20 years ago, but which are much more present now. There are also a couple of drivers which actually are changing, which actually, I would say, revolutionize the banking sector. You can see the numbers. They are quite interesting. The numbers which actually made me some kind of impressed because of that is this 99% of banking executives see the technology as a key driver. Probably it's not a surprise. Probably it's something which you can actually bet on. And also 80% of these executives are also not only thinking about the technology as a key driver, but also doing something about this. So they are trying to reinvest, allocate the capital somehow related to finance and strategy and M&As to somehow be prepared for the future. but this future starts actually now. So this is why they are thinking about using this money wisely and somehow provide a better future for the banking sector. Banking sector, I mean, they bank the organization they are working for. What is also pretty important, because I previously showed you this whole structure, this whole history, this whole path, but it's also very important to understand how exactly this structure looks like, and you can see this on this slide actually. So of course at the top of it there is artificial intelligence, which is commonly known as all of these AI solutions. But when we go deeper and deeper, there are more sophisticated solutions. It's very important to mention that machine learning and artificial intelligence, sometimes we use this both. Sometimes we replace one with another one, but it's not exactly the same. It's not exactly the same because not only how we use it, but also why we use it. And when we go deeper and deeper, we can see, for example, some artificial neural networks. We see nonlinear deep learning programs. But the topic which I would like to touch today, this is actually the generative AI. And the generative AI, the difference between standard algorithm, if we can say so. So the difference between standard algorithm and generative AI is very important to ask the question to ourselves. If this model can produce any new content. New content, not only which is actually copy-paste of the previous existing material, but something which actually is some kind of a new solution. And we can talk for hours how exactly artificial intelligence works, how exactly LLM programs works. Of course, we can say that this is the matter of probability, matter of statistics, why the next word in the sentence is just like this. Of course, this is also true. But what is very actually interesting in the whole topic is that, yeah, exactly, we use AI for creating something new, for a creation, not only to replicate something, but also to recreate. And this is exactly very important thing. And why AI is so important for banking? Actually, I think this chart can give you that answer. This is coming from actually US. Survey was conducted in US. But as you can see, the banking sector, actually the exposure of banking sector is the highest in terms of possibility to replace some of the activities with AI or augmentation, which is actually not the same, because we can understand that AI can do some part of our job. Augmentation is that kind of a solution when actually AI is simultaneously used with personal work, the work conducted by the real human worker. And what might be maybe not the threat, but the biggest challenge in the future is actually to finding the actually common ground from both of the solutions, and somehow also to not only to calibrate, but also somehow to compare these two words, and that might be the biggest problem in terms of actually smooth transition of a banking banking models, business models of banking, let's say. And that might be the biggest challenge in the future. But of course, it's not only related to banking, it's related to every industry. And as you can see in the last year, this trend is growing. This AI usage is growing, as you can probably imagine, in the same way as cloud and edge computing is more important. Also, some other solutions more focused on digitalization of banking sector. Definitely, the importance, the significance of these solutions the trend is with the positive actually curve. So actually we can see that trend, and it's actually not a big surprise. There are also other solutions which are very important for the banking, like big data analytics, biometrics, quantum computing, of course. But what somehow to some extent, of course. What are the showstoppers of the further development are, of course, the potential investments which have to be done to implement the given solution. AI, maybe that might be kind of a paradox, because on the one hand side, it's very cost consuming part, energy consuming, time, maybe not time consuming, but let's say energy consuming and actually capital consuming solution. It's of course not time consuming solution because we actually use AI to actually save our time. That's for sure. Nevertheless, it's actually very important to understand that we use AI, and we can actually use AI not only for a big systems, but also we can use it on a daily basis. So even a worker which is on the entry level in bank can actually use some solutions. I mentioned Copilot at the beginning, so it's also possible to use it. It's possible to use, for example, ChatGPT. And of course, there are a lot of discussions about the confidentiality of the data, about some kind of if the data are inclusive, if the given model doesn't share the information with some external users, of course. But on the other hand, it's very difficult to somehow stop workers from using any solutions. So the faster, the quicker the given organization decided to implement some solution, the better for actually the vulnerability of the system, for the actually security of the system. There's also the question, so if we know that banking sector is using AI, the question is why they are using and what for. And as you can see, one of the most important segments are, of course, fraud detection, MLL, and profiling clients as the most important segment. And actually, why is that? We observe that we have few different groups of banking users. We could see also the trend that younger generation is using mobile apps more often. It's more or less quite obvious. But we also have generations which actually don't like to use mobile apps. And I observed it during one of my previous projects for one of the company. And actually we saw that there is a group of people, let's say the elder people, they actually know how to use applications, but for some reasons they don't want to use it. And the reasons might be quite surprising, because they don't want to use it because they really like to actually do that daily routine, that they are going out, they are visiting branch, they are talking to banker, they are talking to advisor. And this is some kind of very important, this whole process is kind of very important for them. And this is kind of a challenge actually for banks to somehow convince them that it still makes more sense to use mobile app than just visiting the application, just visiting the branch instead of just using the application. You probably observe it, like if you wanted to do a manual transfer in your branch, normally you need to pay some money, 10, 15, what is 20. I can imagine that the cost of it will be getting higher and higher. And actually, there is a reason for that. It's not because this whole process is so costly, it's so expensive. It's just rather a tool somehow to convince you, instead of using branch, to just using your mobile app. And normally the transfers transfer all of these kind of payments in your mobile app are for free. And this is actually the one of the reasons. But what I would like to conclude on that is it doesn't mean that the other segments are less important, because, for example, of course, we can use that for AI for credit scoring. The total usage is a little bit less. The level of it is a little bit lower, but it doesn't mean it's not important. It also can save a lot of money for banks. So we can probably expect the further development of the solutions for the other segments as well. I already mentioned about two main dimensions for implementation of AI in banking. And if we wanted to do it quite simple, we can divide it into two main areas, front office and back office. And as it was already said, front office, these are all of the activities related to CRM, related to actually advisory part of the business, how to actually treat clients, how to actually give them the product, give them the services which they expect. And the main important topic is how to do it quickly, how to do it in a good manner, and how to make your client happy. But on the other hand, there is also a back office, which is not less important. It's equally important because to provide all of the solutions on a front office level in a good quality, you need to have a very stable back office system. And it's related to biometrics. It's related to biometrics, which protects clients from any mischarge or any things like this. It's all related to machine learning, which can actually detect any fraud, potential frauds. So AI can actually capitalize on any patterns, cybersecurity attacks. Actually, AI can identify any of these risks related to this, and at the end, the bank can capitalize on it thanks to saving some money because of the potential threat. And there are also a lot of different solutions. This table is not exhaustive at all, and we can be kind of assured that the potential ideas will just come up. There is still a lot of spaces for completely new solutions which have not been mentioned or actually listed anywhere else. And actually here you can see top 20 banking roles which benefit from using generative AI. The pink bubbles are related to front office. Blue bubbles are related to middle and back office. And actually, it's quite easily to observe that the front office could benefit a little bit more because this is mostly related to all of this stuff, all of these things which can real impact on the client. And also from the marketing perspective, is very good thing to offer to your client, because when you show some kind of a solution for your client, this is also the message which is coming with it, that yeah, we are a bank who actually, we are the bank, we are the workers who actually use AI, we know how to use it, so probably we are better than our competitors. And this is also a very important message to any organization which you are actually sharing with the whole market. So this is also one of the reasons why it still makes sense to invest money in front office. Even the back office system, back office solutions are quite important too. And as you can see here, there is the whole structure. Where exactly can you use it? Can you use it AI, or where exactly the bank can use it? What is the level of impact? And I can see all of these impacts actually vary between all of the segments, all of the departments, and there are some of them which actually are less difficult to implement any of these solutions. Some of them can generate more challenges, but all in all, in almost every piece of activities, there is some kind of a possibility to use AI. So this is a very important thing, that actually it touches every part of the bank, every part of the organization. Talking about the entry level, as I mentioned at the beginning, also to a CEO level, because there is no reason why, for example, AI cannot help CEO in preparing the presentation for a board meeting. And it's also possible, and you can also see it here, like it's coming from deposits to commercial banking and wealth management. So we can be more or less confident that if there is a possibility to implement something, the banking sector will do it. And now looking at this whole thing from the perspective of potential client, we will see how exactly it looks like step by step. And one of the case study is coming from the experience of retail customer, which actually uses mobile banking app on a daily basis. And actually, probably this is the process we actually know quite well in Poland. Almost every mobile app is giving us this kind of opportunity to recognize our account facially, to do some kind of the seamless integration via your watch, via your I don't know, maybe even a biometric, whatever. There is plenty of solutions. Recently, there was also an announcement that one of the companies decided to use also somehow actually identify your eyes. So instead of using cards, instead of using even biometric on your fingers, you can just see your face, not whole face, but actually your eye, and that will be enough to make a payment. And it's actually available in Poland even nowadays. So this is kind of a experience from the normal standard retail customer, but there is also an experience which we could observe from the perspective of small or medium-sized enterprise customer. And more or less, as you can see, the process is the same. The main difference between enterprise customer and retail customer is that the level of documentation for the group of entrepreneurs, it might be much higher. And actually today applications can also give you that kind of a possibility to, instead of printing all of the solutions, you can also use them, use your scanner to identify and even sign up all of your documents. In Poland, we know that kind of a solution which is called profil zaufany. So actually you just need to log in to the system. You can do it actually via your mobile app instead of just actually scanning your ID document or any other documents which actually can identify you. And I talk a lot about the potential benefits. As you can see, there is probably no limit for potential benefits in the future. We can actually assume that. But every time when we talk about some kind of the benefits, when we talk about potential profits, we should be also aware of potential threats and all of the risks associated to this. And there is no doubt that there will be a lot of different risks related to AI. They already exist. And this is the first thing, but the second point is that the level of this risk, actually the frequency of potential threats for banking systems will be getting more and more frequent. This is something which we can actually assume, and this is something which we actually see in the numbers from the past. But what are the key risks of using generative AI? They are also a risk not coming from outside the organization, but also they are some kind of the risk inside the organization. And one of the examples is actually this reliability of data, which I mentioned at the beginning. Many of the AI models produce some kind of which is called hallucinations. So this is exactly what you probably observed in the past, that when you use AI, you are receiving the answer, but you can imagine that this answer is not correct for some reasons, but AI almost never say, I don't know, I don't have any data. So if there is a accuracy that there is no data, AI will actually make up some solution, some kind of an answer, which might not be completely true, but on the level of actually when you start trust your AI model, it might be very difficult to actually not be lured by the technology. So it's very important to, at this stage, maybe in the near future it will change, but now it's very important to assess, to review all of the data which are coming from AI models. And there are also different risks associated to this. As I mentioned, data governance, access to skills, and other concerns, which one of the most important is, of course, energy consumption, because energy consumption, because of AI, will be growing. It is growing. So at some point, it might be very difficult to actually meet the demand which AI can require. And this is the summary of all of these potential benefits and all of these potential challenges. So on the one hand side, AI can help with cyber security in banks, thanks to improving all of the systems which are responsible for threat detection. They can also mitigate the risk because for AI, it's much easier to find the potential patterns and actually to some kind of predict the potential AI threat than for a normal standard human worker. But on the other hand, AI might be also used by hackers to be more sophisticated in all of these attacks. They can even automate some of the system to actually attack the bank on a daily basis, multiple times in the same moment. So there are actually some kind of the questions coming from potential threats and also answers which are prepared by banks. And there is still that kind of a race. At this moment, we could say that banks are winning this game because normally standard bank in Poland is attacked almost in every minute, almost in every 5 minutes, let's say. But it doesn't mean that these systems don't work. They do actually, even with some small problems sometimes. But all in all, the system is quite stable. But the stability will require more and more probably investments, more and more actually, let's say, considerations in the future, because all of these attacks, all of these threats might be more sophisticated, and hackers may use more advanced solutions in the future. And these are also kind of the questions, kind of actually considerations, maybe not the questions, but these are the topics which I would like to leave you with, something to think through after my presentation, actually how the cyber risks will be threatening the systems because of the AI development in banking sector. So just coming quite shortly through all of these 5 topics. First of all, digitalization and these potential vulnerabilities. This is something we just mentioned about. The stability of the system might be more actually challenged in the near future. There will be also some systematic risk factors related to this. This whole critical infrastructure need to be prepared for it. There might be a need, and actually it is a need even now, for macroprudential oversight. So it's also very important that the whole EU, the EU as itself, will keep an eye on all of these potential threats and determinants of cyber attacks. All of the things today are global. And in the times of this political uncertainty, it's also very difficult to be prepared on everything, but somehow we need to be prepared on everything. And this last one is actually kind of related to the third one, policy recommendation. So the role of EU in all of this, in all of these topics which I touched today, is to prepare the regulations, prepare the policy which make this whole EU banking system stable and, let's say, bulletproof. Yeah, so I think that's all. Thank you very much.
Thank you. Thank you, Patrick, for this interesting presentation. I'm wondering how many of our participants have prepared some questions, but I already saw one of the questions from Magdalena Markiewicz. And Magda, I know that you are here with us, and I know that you are enough brave to start the conversation and the discussion. So please just turn on the microphone and ask the question to Patrick. And then I see Professor Felicini will have the second voice already there, and then we will see what happens. So Magdalena.
Yeah, hello. Thank you very much, first of all, for the presentation, which was absolutely great. And I think that it is, very comprehensive. Yes, so when touched all the problems I can say that we can imagine coming with AI, but it was also a very good perspective on many layers of the usage of AI. Yes, and what we also discussed, AI is with us for so many years. This is not a new new being, yes, we can say. And I'm very interested in, of course, in the perspectives and also the possibilities of the use in automation in AI data processing, because it's very fantastic and it makes us maybe sometimes using that more comfortably, you know, and the problem is always in finance and in banking, the trust. Yes, so this is why I was very interested in these slides that you showed, which were connected with that. So when this is why my question, which is also in the chat, is in what ways does AI-driven fraud detection and document processing in the back office contribute to operational resilience, yes, and efficiency in banking, because we know that it is used. And, that was absolutely fantastic when you saw that, we saw that it is used in AML and the other in the other departments. But when I would like to know more about, if you can, of course, share it with us. In what ways it really contribute to this resilience, yes, and efficiency? Because when we know that, okay, we can detect more frauds, yes, it is the effectiveness in this processing perspective, but I mean rather, you know, this trust, resilience, etc. Because probably we know that sometimes we have just mechanisms, yes, you know, we are also trustful, you know, to different extent as well, yes. And I know that it's a very maybe sensitive question, however, well, let's try. And once again, I would like to confirm that it was absolutely interesting presentation. I'm very happy to be with you today.
Yeah, thanks for that comment and for the question. Yes, actually, it's probably hard to explain it in one sentence. How does it look like for the very beginning? But in a on a granular level. But on the other hand, there are some examples, because the question was, for example, how actually AI can help with all of this risk mitigation, all of these fraud threats. JP Morgan, for example, upload all of the documents, all of the materials, application, for example, related to mortgages. All of them are uploaded to the system, to the cloud service, which provided by the cloud service provider. And actually, they can detect some discrepancies, analyzing all of the patterns even in milliseconds. So this is exactly how does it look like. Normally, probably the main usage is actually related with LLM models. And the biggest opportunity for the system, the biggest potential is in actually looking for some kind of the variances from the patterns, which actually the system knows pretty well because of analyzing tons of documents from the past. So every small discrepancy is actually identified, and the actually differences between how AI system is doing it and differences between how worker is doing it, human worker is doing it. All of people actually are some kind of a, how to say it, there are some errors, human errors, let's say, and AI can actually reduce all of these errors, because when you see the statistics, the level of errors conducted by the AI models are on a less level when you talk about some kind of a repetitive task. Because maybe I didn't mention it at the beginning, but from my perspective, from my current observation is that all of these AI models, most of the AI models are great with very repetitive tasks. When you need to write a document, great. When you actually use AI for reading of the documents because you don't have time to do it and you need the summary, of course it's great. But we are talking about the more sophisticated solution with the content creation, which need to be very detailed, and actually where every line is crucial, then this is something which definitely we need to review. But as it has been said at the beginning, the potential for users is actually huge, and the level and actually the significance of using AI models for ML detections as well, it will be growing and growing. But it doesn't mean that there will be not space for people in it. Definitely, there probably will be the different tasks for workers. So they will. This is that augmentation which I mentioned. They will need to collaborate with the system on some levels.
Yeah, thank you for the answer. And well, I fully agree that well, humans probably will be still needed. Well, I see in the discussion something like sometimes we really follow well this mindset that well humans are very often mistaken, yes, and AI not, and we know that AI also makes mistakes, yes.
Exactly.
So this is why, yeah, so for the banks it is just seeking the very the absolute ideal system, yes. So when of course, yes, we can be closer with the data that you have mentioned. Yeah. Thank you very much. Thank you very much. I will be curious about the other questions as well. And well, thank you very much also for your overall presentation. Thank you.
I'm very happy to hear today that people will be there still. So the key point is to build the competences with the usage of AI by our students that are here today, that this is very important for us. So we have the feedback. Now, Professor Daniela Felicini has the question. You have to unmute yourself.
Can I?
Yeah.
Okay, good afternoon, everybody.
Okay. Agnieszka, first, Professor Daniela Felicini, just give us 1 moment.
Sure.
Yes.
Oh, Professor?
Here I am.
So, Professor Felicini, you can ask the question.
Okay, so thank you to Dr. Diebeck for his interesting, really clever presentation, also for people that are not at all expert of AI. It seems to me it's a classic question by an historian, of course, even if a business and economic historian. It seems to me that AI profoundly alters, let's say, transform the most classic elements of banking activity. From my university studies, I remember, for instance, something about creditworthiness, assessing creditworthiness and confidentiality. So how AI could preserve, even if innovating, these 2 pillars of banking? Is it, let's say, fine enough to assess creditworthiness of customer asking for a loan, for instance, and how is able to respect confidentiality?
Yep. Thank you for that question. So actually replying to the first part of the question, so if it will be only related to creditworthiness, I would say no. Actually, we see it how the front office background of banking is changing. And as I mentioned, there are a lot of solutions prepared for the customers, and it's not only about giving them the actually better solutions. Better solution as itself, of course, is very important. But what is also important is to giving the message that we are actually keeping eye on every new trend, and our bank is better than the other bank because actually we have an expert on our board. And it's very difficult to say where is the limit because actually we don't know. Actually, we don't know because what we knew about the AI 2 years ago, 3 years ago, the level of knowledge was on a completely different we were in a completely different position than when we are today. And actually, we don't know what will happen in the next 5 years, in the next 10 years. There are some of course, there are some rumors. For example, World Economic Forum is saying that actually one or even more, 92 million people will lose their job to 2030 because of AI. But of course, there is one part of losing jobs, but on the other hand, there is a lot of new jobs which will be created because of AI. So it doesn't mean that probably we won't be working on the same topic for our whole life as it used to be 30, 40 years ago. Probably we will need to adapt to all of the new challenges in a quicker way, but it doesn't mean that it's not possible. It is. But definitely there is something which we need to be aware of. And the better we will actually prepare ourselves how to use AI in smart way, because there will be errors. There are errors, they will be maybe on a different level in the future with different frequency. Maybe this AI model will be more accurate because they are learning and learning and learning. But it doesn't mean that there will be one ideal perfect solution. And as I saw on one of the slides, actually AI will touch every part of bank, and whatever it is, if it is on front end, back office, whatever. Definitely there we can easily find a solution for almost every part of it. But how it will be implemented, there is a completely different story, because it also depends how executives see the problem, how willing are they to actually implement some new solutions, and what kind of actually budget they have to do this. So there's a lot of also discussions about the strategy. This process might be long, might be shorter. Probably in a startups or fintech, it will be probably easier to convince the rest of the executives to implement new solution. But there's completely different story, for example, for our next conference to talk how exactly implement all of these solutions.
Thank you.
Thank you very much. And we have the question from the audience on site at Warsaw School of Economics. I know there is a Professor Agnieszka Domańska next to Agnieszka. So, Professor, you can ask the question.
Thank you very much. Good afternoon, everybody. Okay, my question, first of all, I would like to accentuate that both artificial intelligence and the banking system and generally, don't you hear me?
Yeah, now it's okay.
No, okay. Okay. Agnieszka Domańska, again, Professor of Economics of the Warsaw School of Economics. First of all, I would like to accentuate, to point out that, in fact, both the artificial intelligence and the banking system are not in my, let's say, in my scientific interests. But that is why my question is going to have some more, I would say, general character. And this question concerns impact of using such common and such wide using of the artificial intelligence in the banking system on the labor market, because my economic let's say intuition and common sense says that it must have that it's going to have a big negative impact on the labor market. You mentioned that artificial intelligence is going to be used in, for example, real-time transactions analysis, and it's going to be using some bots, or humanoid robots, which are going to replace the human or the people's work, and those both working in the in the front office, but also those who are working in the back office, like analytics and so on. So general. So do you have? So I think that, in fact, a lot of people, I think that probably thousands of people in the world are going to use simply to lose their jobs. And my question is, do you have, or are there any reliable prognosis or estimations of the impact of using AI in the banking sector. You know, generally, maybe the prognosis, the global prognosis, simply saying how many people are going to lose their jobs, those who are working in the banking system, and in the next, for example, in the perspective of the next 5 years. And this is the second question, and this is the first question. And the second question concerns. It is also very general, and it concerns the security, because you have mentioned, and we all know, of course, that digitalizations brings a lot of or makes the banking system and generally activity of many branches to be more prone to cyber attacks. So isn't going to be that when we are going to use or utilize the artificial intelligence in the banking sector so widely and, you know, so deeply and all over the world, we as a human race put much more and put the banking system and, let's say, in fact, the security of people's, you know, savings and the people's money on much greater risk of the attacks, of the cyber attacks, which could be so generated by the artificial intelligence. And those attacks, as the artificial intelligence is, of course, the intelligence, so those attacks and this risk is much more unexpected, and maybe the scale, which could be unbelievable and completely unpredictable and so great that we will not be able to beat it, you know, in the future totally. That will be, you know, completely prone to even much bigger risk of the cyber attacks, you know, generated by the AI. What do you think?
Okay, thank you very much for both questions. Talking about the first one, what are the forecasts? What I read recently, that was the analysis prepared by Bloomberg. According to the forecast, more or less 200,000 positions in banking actually will be replaced by AI in next 5 years. But this is actually just the half of the glass, because from the negative perspective, these numbers of jobs will be actually replaced by AI, but it's not saying how many new positions will be created because of AI. And if you've been observing the recent numbers about the employment in banking sector, of course there is some kind of a trend that less and less people are working in banking, but every time when we hear that there is an announcement that people will lose a job in bank, there is also a lot of announcement about new campaign in bank, which actually start recruiting new people for completely new positions. So as I mentioned in the middle of the presentation, somehow we will have to face that we need to adapt to a new world, to the world which is fast, is very dynamic, is very fast changing. It doesn't mean that will not be any work for people in banking on any different sector. Of course, it will change. The characteristic of our work will change. Definitely, first of all, that would be my forecast, that the positions which mostly work on a task which are quite repetitive, these positions will be replaced at first, because it's also the easiest to replace them. It doesn't require a lot of money, it doesn't require a lot of capital, a lot of actually work. But there is also a lot of positions which actually rely on some kind of a relationship between customer and between the corporation. And actually wealth management is a good example. It's not about doing some kind of a job using your application and finding the number. Of course, a lot of applications can do it, But what is very important is actually to talk to someone who will give you that kind of the confidence that this solution is good. And there are a lot of some research. There are a lot of analysis which are saying that people trust people, and we don't trust AI on the same level. But it is now. We don't know how it will look like in the next 10, 15 years. That might be quite big struggle in the future if we start relying on AI more on the people. But actually, we don't know how it will happen, when and how, and actually what will be the final impact. We only can do some kind of a forecast. We only can do some guesses, but we don't know it. And I wouldn't like to give you that, let's say, straightforward answer because I don't have it. This is the answer for a first question. I hope I will gave you the answer you expected. And talking to the second question about this security, topic related to security in banking. Yes, I fully agree. That might be and probably there is such feature, if we can say it, that could, for example, appear a new way of stealing money from bank, if we can say it in a such straightforward way. And definitely there will be a new solutions because hackers or any other organization which actually want to steal money from banks, they are also working with AI. They are developing new solutions, but it doesn't mean that there is no possible way to actually protect this whole organization from potential threats. And this is why it's very important not to have end-to-end solution understanding as a solution which is actually focusing only on one threat. It's rather about creating such kind of the safety net. And also there is a big role of European institutions, like, for example, European Banking Authority, which is actually doing such kind of a monitoring, such kind of the assessment of stability, vulnerability of cybersecurity systems for the whole banking sector. It's also very important to actually rather be proactive than just reactive when something happens. We need to be prepared before anything happens. And this is how exactly banks should do it. They should follow the instructions from European institutions. And actually they do it, and they do it on quite good way, I would say. But as I mentioned, we never know. For many years, there was no such event like recently in Spain and Portugal, this whole blackout for a couple of hours. Now we know, and actually there are some people which are prepared. Probably you can use energy storage system. There's not a problem for that. Problem is that you need to expect something unexpected, and that is probably the main thing to consider. Yeah.
Thank you very much. I will just have a look on the chat if anything appeared. Nothing for now. Is there anybody who would like, even though we are after time, would like to ask a question? Agnieszka.
Yeah, I'm sorry because I was I was not hearable. Okay, so just thank you very much for your response. And you mentioned 2,000 types of jobs, yeah, because you I think you mentioned the number as to, you know, hard numbers, and you mentioned 2,000 types, yeah, of positions, because you were talking about the positions, yeah.
Yeah, maybe.
So I mean the types of the types of, let's say, of the activities, yeah, or the types of positions, yeah.
So let me clarify.
Which are put at risk of, let's say, losing jobs.
Yeah, let me clarify it. Well? Maybe I said something wrongly, but what I meant, it was 200,000 jobs as a positions. Yeah.
Okay.
Yeah.
Yeah. Sorry. Thank you very much. You know, sometimes it's you are not, let's say, audible very well, and yeah. Sorry. Maybe. Yeah. Thank you very much.
Thank you. You're welcome.
So now it is clear. Even though we are after time, I would like shortly to ask one question to Professor Daniela Felicini. According to Next Generation EU, I'm the representation of more economic integration, European integration researcher. So I know that the Next Generation EU was proposed under huge pressure, but also revealed that EU has the ability to respond quickly, effectively, and propose innovative tools. Do you think, I will just ask a general question, because now we are again in very stressful, volatile time connected with the situation in the context of the trade war with the US. We do not know actually what will happen in next weeks because the situation is changing rapidly. So my question is, do you think from your perspective, from your experience as a researcher, but also the expert who observes the European life since many years, and you explore those topics, do you think that EU will be able to go beyond the member states' interest and to propose again some innovative ways of financing in the next perspective, as we are at the edge of discussing this and negotiating already? Something that will push us all in EU, as Draghi in his report mentioned, to be in this competitiveness game again next to US and China as an equal partner and competitor. Please unmute, Professor, yourself.
Thank you, Alexandra. Is a $1 million question. Very difficult to find an answer. Surely, for sure, Next Generation EU represented a very different answer from the one, this very disappointing and inefficient answer given by European Union after the financial crisis of 2008. So it revealed that European Union has the capability to give, let's say, efficient answer, to give, let's say, to give answer rooted in the needs of European people also, since the distance now, the gap between people and European institutions is larger in this period, at least in some countries. So I think that European Union has the capability. Now the risk is also that since in the scenario, in the background, we have two main choices, what to do in the world trade with the US and what to do for European defense. And in these, let's say, topics enter a lot of factors that are not just economic factors. For instance, let's say, different orientation about war, to take part, not to take part. So it's a more fragmented political paint in comparison. And also with let's say, looking at the, let's say, trade war with US, the risk is that some countries, let's say, will take decisions alone, as my country, as Italy, for instance, in order only for, let's say, internal politics reason, of course, but risk to go and negotiate with Trump special treatment, which is not at all corresponding to the reality. Since, for instance, for Italy, benefited of having, let's say, a calculation of the toll fee only of 30%, thanks to the average of the European Union. On the contrary, looking at the basket of Italian export to US, we risked very higher fees. So it's difficult to convince the policymakers of some European countries that unity in these phases, in this season, is the only answer, the only one. But I don't know if you remember the let's say the idea, the main concept of Jacques Delors and his criticism against the court-termisme, so the short-term vision. We risk to use just a short-term glance. Now we need to have let's say, at least a medium term, if not a longer term, but at least a medium term vision of what European Union could do in this period. Thank you for your question.
Thank you. I have to both of you a lot of questions on my in my notes, but I will keep them and invite you for a one-on-one interview for our project. So we will record some extra material. So I will have the possibility to ask you some further question and deepen a little bit some of the issues that you touched during the seminar. I would like really very deeply from the bottom of our hearts, thank you for your engagement in today's seminar, that you prepared very interesting materials and you were very inspiring for us. I wanted to thank you to our audience that you were so creative and active today. So it was a pleasure for me to moderate today's meeting. I think that we will be left today from those topics that we discussed with the resilience in our hands, with some flexibility that we need to adapt and try to be brave in those our activities that we undertake and very oriented, goal-oriented, what we want to achieve, because the surrounding around us is changing very dynamically, which creates threats but also opportunities for us. So I hope that with this positive message I will leave you today. Thank you very much once again. Thank you, Professor. Thank you, Patrick, for your engagement. And once again, I hope that we will meet in Gdańsk or in Warsaw one-on-one and also online during our interviews. Thank you very much.